Okay, so it's exactly 3 p.m. Nigerian time, and I am pleased to welcome each and every one of you to Foreign Investment Network's meeting. The theme for this meeting is investment opportunities, looking at investment opportunities post-COVID-19 in the upstream oil and gas industry. As we all know, COVID-19 has hit the world in a very disruptive way, and the oil and gas industry has been the most hit. Now, S&P Global Platts had come up with a report that oil and gas industries all over the world and oil and gas industries in Africa would have to be very strategic when they are considering investment opportunities. Now, the question is, where should investors go in terms of opportunities? Speaking about upstream investment, what kinds of projects should investors consider? Speaking about upstream investment, I do have erudite speakers from 3 continents in the world who are right here on the program, and the other two will be joining us just when the program begins. They're having a bit of technical difficulties. I do hope they get it sorted and they're able to join us. I would like to begin with the very first speaker. The very first speaker on today's virtual meeting is Dr. Stuart Lake. Dr. Stuart Lake has over 34 years of global experience in the petroleum industry. He has operated assets in 20 countries globally, including 10 in Africa. He has a world track record as an oil and gas finder with 90% exploration success rate from over 300 wells. The wells that he has explored include deep water. He's the past CEO of African Petroleum Corporation Limited. He's the past CEO and ex-vice president of exploration in Hess Corporation. He has led 30 onshore discoveries in Russia. He's the CEO, AGM Petroleum Ghana, the former CEO, Minexco, and he has spent over 19 years at Shell International. He has also spent several years in Chile and Argentina with Apache's exploration activities. He has held board positions with the University of Utah in the United States of America. He is the past Vice President Exploration of Shell, Russia, and he's the non-executive director of Tamboran Resources and Capitrio Energy. Ladies and gentlemen, he is the current director of Invictus Energy, an oil and gas exploration company listed in Perth, Australia. Himself and a few other speakers would be talking about the subject matter for today. I am more than pleased and honored to welcome the first speaker for today in person of Dr. Stuart Lake, CEO Invictus Energy, Perth, Australia. Thank you very much for coming on the program, sir.
Thank you very much. Thank you very much for allowing me to join you.
Thank you. Very quickly, I would also like to observe my order of protocol. I see a few people who have just joined. I'd like to acknowledge the presence of the former Minister of Finance, South Sudan, Mr. Mo Ambrostic. I would also like to acknowledge the presence of the Minister of Petroleum in Nigeria. The Chief of Staff to the Honorable Minister for Petroleum Resources in Nigeria is being represented by the Senior Technical Assistant in the Office of the Honorable Minister of State for Petroleum Resources here in Nigeria. We're glad to have you. I would also like to acknowledge the presence of the Deputy Minister for Energy, Ghana, who is actually here with us. We're also pleased to have you here, Mr. Engineer Mohammed Amin Adam. So we'll begin very quickly with Dr. Stuart Lake. So like I did set the preamble for the discussion, for the conversation, the oil and gas industry has been badly hit by COVID-19 in 2020. If you were to review, going by the fact that you were the ex-vice president of Russia for exploration, you've actually worked in Africa as well, 5 countries to be precise. What would be your comments and statements on the status of exploration and production worldwide so far?
Well, the status of exploration and production has been challenging. Obviously, what we've seen is a collapse in the oil price at OPEC. We saw initially the price war between Russia and Saudi Arabia. Brent fell to its lowest levels for 20 years. It's kind of stabilized the oil price between $40 and $50 at the present time. I believe Brent is now at 50. But the global demand dropped, as you saw, by about 30 million barrels of oil per day. So that wiped off about a decade of demand growth. We've seen that exploration has been challenged in terms of budgets, exploration spend. We've seen a lot of companies downsizing. Budgets have fallen at least 70% across the board to probably the new normal around $15 billion across the world with very many companies, as is highlighted by Woodmac. Deal count has also fallen down. Very few deals are going through. The last big one we saw was Chevron Noble, about $13 billion. And deal spend is about 90% down on the previous year. In Africa, we've seen a lot of spend going down. We've seen the FIDs that were planned, final investment decisions on many projects in Africa, the top 10 haven't actually been executed this year. So things like Rovuma, Tortue, Deepwater Cape 3 Points, Kenya, South Africa, zero FIDs this year as a result of COVID. And we've also seen production down with the NOCs, particularly those that are OPEC members. So it's been a very challenging year for everybody. With obviously, in addition to that, it's one of these things that's affected everyone, irrespective of race, creed, or nationality. And for many people, they've had losses in their family and so forth. And so obviously we have to come out of this crisis and move forward. We've seen big write-downs across the world, but we have seen, luckily in Australia as a case in point, and other areas, share prices are starting to recover now with line of sight to vaccines and people getting a control of the virus. We've seen share prices recover. We've seen investment sentiment improve substantially. Still, we expect the M&A field to keep increasing. There's a lot of companies with debt on their books that will have to address that debt in the short term. And so we see opportunity there for many people. In fact, if Tamboran, one of the companies I'm involved with, we just did a deal last week where we acquired Sweet Pea Petroleum. And so, and we use that through private equity money.
Okay, fantastic. Now, if we look at the roles that OPEC has played, from 2014, the prices of oil has been falling drastically, and of course, in 2019, 2020, it's even been worse. So now, if you're looking at the roles that OPEC and many other financial institutions like the IFC, the World Bank, the African Finance Corporation have played, they have tried in no small way in stabilizing the industry. Now, if you were to advise the government and maybe the private sector, what would your advice be?
I think, look, the governments need to ensure they have a very attractive regulatory environment and the rule of law is encouraged for investors. The government needs to be very open and transparent in terms of how they do things and they need to be very fast on decision making.
Okay.
They need to recognize that the world out there is very broad, and so investment, let's say specifically for Africa, may be drawn into other parts of the world if other parts of the world want to get things done more effectively and more quickly. So they need to ensure there's a consistent set of regulations. They need to have a good tax regime. They need to provide a level playing field for everybody. And the industry needs to feel they can have good long-term returns over a long period of time.
Okay. The next question I'd like to ask you is, has there been any new development in the market in Australia? Australia is where you are stationed. That's where Invictus Energy is headquartered. So from 2019 to 2020, when after COVID hit, has there been any new markets? Has there been any new frontiers, new bases for exploration and production so far?
Yeah, well, with Tamboran, we're actually in one. We're actually opening up the whole Northern Territories at the present time to an unconventional play. So bringing in the experience we bring from America to Australia. Those rocks are 2 billion years old. They're the oldest organic rocks in the world. So no one ever expected them to produce, but they've been producing on test up to 3 million standard cubic feet per day. And we expect with horizontal wells and multi-stage fracks, we can get 10 million scuffs per day from each well.
Okay.
Coal seam gas has been a big development over in Australia. The biggest thing in Australia, of course, is Australia is now the leading player in LNG. They've now beat Qatar. There's now 7 LNGs come on stream since 2014. However, many of those were initially over time and over budget. But now they're on stream. There's filling in lots of gas demand that exists both globally and locally and regionally.
Okay, Dr. Swartley, could you highlight some of the roles that you have played in exploration and production? I mean, for having a career that has spanned more than 3 decades, working in different parts of the world, and I'm very key about Africa. You've played, tremendous roles in the industry. Could you just highlight briefly on some of these roles?
Yeah, I mean, I'll be very brief. I mean, my initial experience was 19 years in Shell. I did a variety of roles. I initially started in Africa, on Ethiopia and Somalia, and then I was involved with Sudan and then Angola. And then after that, I was in charge of exploration for Africa and the Middle East with Shell. I was involved, I actually lived in Egypt for 2 years and was working with well operations there and so forth and exploration. So I had a chance with that.
Okay.
Then later on with Apache is very large in Egypt, so we were supporting Apache there. And with Hess, we were in Egypt and Libya, and we also had assets elsewhere along the continent. With those assets, we had to manage through the Arab Spring. We were actually drilling in the Red Sea at that time, so we had to manage that on the ground. And then with the Hess Corporation, I was involved with Ghana. And then beyond that, I was involved with Africa Petroleum, specifically on the whole of West Coast Africa. So we had Cote d'Ivoire, Senegal, Gambia, Liberia, and Sierra Leone. And then since that time, I've been working Ghana again with Minexco and AGM.
Okay.
And obviously with Invictus, I'm involved with Zimbabwe.
Okay.
I've also overseen new ventures for Shell and Hess for Africa. And so I have seen many things in Africa over time, and was heavily involved with Nigeria in terms of getting rid of the or exiting some of the Shell marginal field developments. So we got rid of 120 fields, marginal fields, which we allowed the indigenous companies to go and move forward with and develop.
Okay, very quickly, let me just take you through the latest developments from Invictus Energy in Africa. Now, you're developing one of the largest basins and rifts the continent has ever seen. So ExxonMobil was here in Zimbabwe, I think some 15 to 20 years ago, and they were unable to find oil. ExxonMobil was only able to find gas. Now, Invictus Energy, just a moment, Invictus Energy, I think 15 to 20 years later, you've been able to explore that same region and you've been able to find oil, which is on the way. And, from my research yesterday, the information I gathered was the company has already invested, or let's say, $3.5 million on this project. That's for just one well, the preliminary phase of this project. So I would want you to expatiate a bit more into the initiative and projects you're putting up together for Zimbabwe. And do you think most of these projects could have the potentials of solving Southern Africa's energy problems?
Yes, thank you very much. Well, I would add that Invictus Energy, we're actually in Zimbabwe, the only operator actually on the ground in Zimbabwe.
Okay.
With exploration assets. We've taken over former Mobil block that was held in the 80s and 90s. They had a very large concession at the time. They acquired seismic, but they hadn't drilled any wells. In today's money, they would have spent $30 million, but they hadn't drilled one well. So there was nothing drilled, but they found seeps and they found encouragement. They were going to market for farm out, but at that time, there was no gas demand in that area. And they thought gas potential was the biggest, most likely issue. So they walked away. Now, of course, the whole thing has changed. The whole market has changed. South Africa as a whole, has a massive demand for gas. A lot of it has been historically done from coal-fired gas stations. There's a lot of pressure because they're very old now, those stations, to offlay them and offset them with new hydrocarbon sources. The future demand could go up to 200 million scf per day. There's a lack of supply nearby, even with those discoveries by Total in South Africa recently. We need to find about 20 of those to even fill up the demand they actually kind of have. And we believe Invictus will help in that journey. We see the gas pricing is in around $6 to $8 an MCF. So gas to power is going to be very important in the future. So we see, particularly for Zimbabwe is in the center of the South African power pool. So that's the electricity pool for the whole of the region, where there are up to 12 countries and 230 million people to serve with electricity. We believe we can bring in power into that power pool from gas discovery, should we make any in our acreage, and use that power to leverage across the world or across that whole region.
Okay.
So that's the opportunity space that we see.
Okay, fantastic. Very quickly, I'd like to give the floor to a few people who I'm already getting some questions from. They all have questions for you, but I'd very quickly also want to recognize the presence of the Honorable Commissioner for Energy from the Republic of Gambia. We're very pleased to have you here. Thank you for joining us. And then again, I'd also like to recognize the presence of Mr. Leslie Abe. He's the Deputy Executive Director, Covenant House, New York, USA. Thank you. The MD Integral Energy, Femi Ogunsanwo, is also present here with us. Thank you. Erie Onagurua, the Head External Relations and Government Relations, Walter Smith, Petroman Oil Limited, is equally here with us. Thank you so much for joining us. So the next question to Dr. Stuart Lake. Now, considering the downward trend in the oil and gas industry for upstream exploration, if you were to advise on what sectors, on what regions, what countries investors should be looking at post-COVID 2021, what would it be?
Well, I would say that the challenge with exploration is that 10 years ago, the areas that we've now found lots of big hydrocarbons were not the areas that we were looking 10 years ago. So I would argue that the Senegals, the Mozambiques, Guianas, as cases in point, Cyprus, and so forth, are areas of the world which had no hydrocarbons 10 years ago, and today are the leaders going forward. And there are
Okay.
many other countries I could put on that list.
Okay.
I think that places like Zimbabwe, South Africa, and other regions such as that, which are off the radar screen, are areas where there are opportunity going forwards. And those are areas where there is a large energy demand, there is a large market, and they have an urgent need to have energy. And so I feel that the exploration of the future is going to be found in some of these areas that are kind of off the spot today. So some of the frontier exploration is going to be very key to actually changing some of that mindset. The challenge also is going on as, you know, we're seeing the energy transition going on at the present time. And so there is a lot of demand for renewables and everything else. There's lots of room for that. But there's still going to be a massive demand for oil and gas, certainly for the 2030 year time frame. And so, you know, we have a role to play there as well. And one of the other companies I'm involved with is Capatero, where we're involved with trying to help NOCs, particularly in North Africa as a case in point, help get the flares out, because the flares are obviously they're burning away gas, and that is also affecting the climate and the atmosphere. And we feel we can actually keep that gas in the ground and sell that gas and commercialize it more effectively for them. So there was lots of opportunity space in terms of that as well in the brownfield areas.
Okay, Dr. Stuart, like this final question before I take question from, our delegates and guests. Now, we had a conversation with someone yesterday, and it was quite obvious that, a state in the USA like New York generates even more electricity than sub-Saharan Africa put together. Now, the question is, if you're looking at renewable energy, the energy sector in general, we're talking about access to clean energy, but for places and countries in sub-Saharan Africa, we don't have access to as much energy as compared to other developing countries. Now, if you look very closely and categorically at the entire situation, people who have access to clean energy, who don't have access to clean energy, rather, do not necessarily have enough money to pay for it. And people who have access to clean energy do not have enough money to pay for it. Those who have enough money to pay for it don't necessarily have access to clean energy. What are your comments on that?
It's a balance. I mean, I think the issue is in the West, there is a drive to actually drive towards clean energy and make those steps. And of course, the UK government, amongst many, has announced that. The US government, with the recent election, there will be a new green energy pact that will come out from the Biden administration, I'm sure, in the new year. I think for developing countries, there are other challenges. There are other more urgent challenges to address. I mean, most people are worried in Africa about getting food and safe and clean water and stuff like that, rather than actually other things. However, I do feel that a place like South Africa is a case in point where there are large coal-fired power stations. By changing that coal to gas, you're making a step to improving the air that people breathe, and actually you can do it for a much more cost-effective base. South Africa is actually currently looking at offsetting that coal-fired generation with diesel, and diesel actually is going to cost you 40% more than if we'd actually put clean gas in there. So I think there's a lot of opportunity space there as well to work. But I think for developing nations, particularly Africa, we have two roles there. One is getting electricity to the people that need it. So in the case of Zimbabwe, it's 14.5 million people in the country, but half of them don't have electricity going to them. Can we help that? And then the second thing is, in places like North Africa, if you're selling your product into Europe, and Europe is going to be putting more regulatory controls on the products they're buying, you need to be able to ensure that you are being environmentally sound in how you producing those products and doing it in a safe and desirable way. Does that make sense?
Thank you very much. So I'd also like to introduce the presence of Mr. Ugbizi Ugar. He's the representative of the Chief of Staff to the Honorable Minister of State for Petroleum Resources. He's represented by the technical assistant in the office of the Honorable Minister of State for Petroleum. We're very glad to have you join us here, Mr. Ugbizi Ugar. I hope I got your name right. Thank you very much. So Dr. Stuart Lake, I would also want to find out something really quickly from you. Now, Nigeria, as is often said, is the largest crude oil producing country in Africa. And it's, quite sad that as much as we are the largest producers, we have not been able to even meet our own fuel needs and fuel demands over the years. So we had Walter Smith, the CEO is supposed to be here. Not sure why he hasn't still connected up until this moment. They were able to put together the very first modular refinery in Nigeria, which happens to be the largest in Africa. It's the first in Nigeria and the largest modular refinery in Africa, the very first. All these years, we've not been able to refine our own crude ourselves. In your own opinion, what does that portend for Nigeria as a country, West Africa as a region, and then Africa as a continent, having, a modular refinery after so many years, probably after 50 years?
I think, like everything else, if you have the regulatory information and the laws in place to actually encourage investment will happen. I think the challenge in Nigeria has been for a long time, there were still issues around trying to get a Petroleum Act passed and so forth. A lot of people were, the investor confidence in terms of that investment was reduced. Now that's been passed, I believe, recently. That investment confidence will increase going forwards. You need to have rules of law. You need to have contract sanctity. You need to be able to have good regulations, and you need to have transparent access to money and use of that money. I think Nigeria is a perfect case where it has a massive resource base, a large population to serve. It's got a lot of indigenous companies now that are developing their own capabilities. I've been involved with some of those companies on helping them on their journey. Some of those companies are also looking to help get the flares out, trying to commercialize the gas and so forth. And I think Water could probably speak to some of the other issues on the ground. But a lot of those things that have happened in the past where there were challenges on the ground with pressure from some of the communities and so forth have improved because the community engagement has improved. And as a result of that, companies have got in and invested and made things move forward. So I think there is an opportunity there in Nigeria to really commercialize it. And yes, you're right. I mean, Nigeria has all the oil and gas out there. It should be one of the richest nations in Africa by far. And so there's a lot of room still to work there to move forward with it there. And, we've seen how deep water's developed in Nigeria very well. The onshore assets have been very well worked up by the majors, and recently indigenous companies have come in. Seplat, as an example, amongst others, have really helped move things forward as well. And so I think, we're seeing everything turning the corner there, which is great.
Okay. Now, Dr. Stuart Lake, for the continent of Africa, you have been actively involved in 5 projects. Precisely. Now, if you were to advise investors who might be coming to invest on the continent, what should they be looking out for? Because, if we're looking at portfolio investors, for instance, they want to invest in a fixed environment. Nobody wants to move their investments from one point to another. Nobody wants to invest in an environment where they are unsure. There's so much of certainty. The level of uncertainty outweighs the level of certainty. So from your perspective, having been a professional in the field, having spent more than 34 years, what would be your advice to investors?
I look for distressed assets at low cost, especially with production, so I get cash flow. I look at contract sanctity and robustness. I also look at above ground risks mitigated. So I want to be sure I have a safe environment for the staff to operate, their health can be managed properly, and I can operate safely. So those are the 3 areas I would look at: distressed assets, contract sanctity, and above ground risks mitigated are the things I would focus in on. And in addition to that, obviously, exploration assets in frontier areas, if you think they're going to really be material, like I believe the one in Zimbabwe, then that can work. If you think about Tullow in terms of what they did with Uganda and Kenya, Ghana originally, they've opened those up. They weren't there before. So there is a lot of space for that as well. But I also think for the existing countries like Angola, Namibia, there are plenty of opportunity there to open up and attract other investors. We're actually seeing some key wells being drilled in some of those countries that will actually change the investor sentiment as well, as we've seen recently with South Africa. So South Africa explorers were going, we're not looking at it, but reality is, the Total discovery last year, Budapala, and then Lupard recently, producing almost 10,000 barrels of oil per day, has suddenly got interest. So it's a bit like Ghana again with Jubilee, attracting lots of investors and interest. And I was involved with some of those discoveries around Jubilee. The same will happen in South Africa shortly as well, I'm fairly sure.
Thank you very much. So I acknowledge the presence of very senior officials from Chevron here present, the presence of very senior officials from Shell and ExxonMobil. I'd also like to specifically make welcome the CEO of Naftali PM Limited. He is the conceptualizer of Sub-Saharan Africa Oil and Gas Summit and meeting in Nairobi, Kenya, where he took all the members and senior officials of NCDMB in 2018. You're very welcome, Mr. Oladeji Olawale. So at the moment, we'll be able to take two questions, and when we're over and done with these questions, we'll begin with the second phase of the conversation. So two questions from two senior stakeholders, please.
Okay. Good afternoon, everybody.
Good afternoon.
Thank you so much for this opportunity, Wofi. And
Just a moment, Mr. Oladeji. Could you introduce yourself, your name, your designation? Thank you.
Okay. My name is Oladeji Olawale. I'm
Okay.
the MD of Naftali and Naftali PM. About 22 years experience in the oil and gas and energy sector. Also an ex-Shell like Stuart. And then I'm the convener of the first Sub-Saharan Energy on Oil and Gas Summit. We had it in Nairobi 2018, as mentioned by the moderator. So my question goes straight to Stuart. And thank you so much for what you said so far. I really appreciate your forthrightness. I appreciate your insights and the fact that you are humble enough to share all these things with us. Thank you so much. That can be taken for granted. Now, my question is because basically I'm passionate about the sub-Sahara, particularly when it comes to our deficiency in energy. And we all know that any country or section of a continent that is deficient in energy, then development will be far from that section of the country or the continent. Now, from your experience, having worked in several places all over the world, what are the things that you think that we can do in sub-Saharan Africa that can actually help us to make up for our deficiency energy-wise? Energy is a problem in sub-Saharan, and we have everything that we should have that will make us to be self-sufficient energy-wise, but we are not. So from your experience, from your expertise, what are the things that we can do? Because that is what my summit is all about. So we hope to have one next year, but that's by the way. Please, Stuart, we'd like to hear from you and other members of the panel. Thank you.
Thank you very much, Mr. Oladeji.
Yeah, and thank you for that comment. I would add, sub-Saharan Africa, there's plenty of alternate solutions of energy as well as the traditional ones. Solar obviously is a big one, and also hydroelectric historically has been a challenge. The problem, of course, has been that droughts have hit maybe the hydroelectric plants. We've seen that in West Africa and also in Central and Southern Africa. And so those plants aren't delivering as much as the capacity as they were designed to do so. Caribou being one example of that. I would say that solar, there's plenty of opportunity in solar. Those things have developed in a very good way. I think certainly for North Africa as a whole, there are lots of opportunities in terms of there's a lot of product being burnt away into the sky without actually going into pipelines. And we feel there's a room there to actually help companies and governments keep that in the ground or convert it to power or find other ways of not just burning it away. I mean, globally at the present time, we basically burn around $21 billion of gas away each year across the world. And, in Africa, 4 African countries are in the top 10 of polluters that are doing that. But I also think hydrocarbon-wise, we're also seeing that if you encourage investment in those countries, in terms of good regulatory reform, make sure that you encourage a multiple series of different investors to come in. If you give them support to ensure they can explore on the ground and allow them to do so, I believe there's lots of opportunity there. So if you take Egypt as a case in point, Zohar was found fairly recently, almost 30 TCF of gas by ENI. In a former block that was held by one of the large majors. So that has changed that landscape quite substantially. There's been a large discovery announced in Russia last week of 28 TCF in the Kara Sea. I still believe there are deeper and bigger opportunities to be found in sub-Saharan Africa if you let companies go in and explore. And I feel that there's a partnership there between the national oil companies and operators, both international operators and domestic, to make that work. There needs to be more encouragement of that. So I would say to many players in sub-Saharan Africa, you need to encourage that investment. You need to be transparent in the rules and regulations. You need to be open in terms of encouraging that investment and allow people to come in and invest and make things work. But I also would say there are alternate energies out there, the sun being one amongst others, which can actually play a role as well. And you can bring both of those parties together.
Okay, Dr. Swartlik, I have a very quick question. So for the US shale oil, it has acted the way we expect. When the prices stabilize, the industry stabilizes. When the prices are increased or when the prices collapse, there's equally a collapse in exploration and production. So my question directly to you is, how would you recommend for policies to evolve with the changing global dynamics, especially in production and exploration?
Well, it needs, I mean, the problem is when the price is very high, the oil price is very high, every government says, well, I need to change my contract and get something more. You need to design a contract that at a high oil price, you get a larger government take, and a low oil price, it's a reduced government take. It needs to be very flexible in doing that. The other thing is, if you take the shale oil in the US, the Permian Basin has attracted like 5,000 private equity partners to go in there and invest large sums of money, of which most of them have lost it, because the reality is in the Permian Basin, you need somewhere between $30 and $45 per barrel to actually be commercially successful. And of course, when the price dipped, everyone was over leveraged, and as a result, there are many companies that are filing for Chapter 11. The reality of unconventionals is it's a very big resource play, but it needs to be at a certain level from an oil price perspective. It needs to be in that $45 to $50 window to be commercially successful. We're looking at, in the case of Tambran, obviously, we have identified a market in Australia where there is a gas market. And so that's where we believe we can play a role there in supporting that gas market. But you need to be sure there's a market there. The Permian Basin, there are many assets that were challenged. Many assets had gas and they didn't have a gas pipeline to put it into. And the gas price there was less than $3 an MCF, so it wasn't worth even doing it. And so you've got to provide an environment which actually encourages the investment, and the price point has to be right for all parties. That's the challenge.
Okay, very quickly, I'd also like to make welcome the past ambassador of Nigeria to France and the Principality of Monaco, Ambassador Akin Fayomi. We're pleased to have you. I also like to welcome the chairman of Foreign Investment Network, Mrs. Yinka Fayomi. Thank you very much for joining us. We're pleased to have you here. Thank you. So the next question I would want to ask you, Dr. Swartlik, is, now, when you're looking at Africa, you've actually mentioned a few factors that investors can consider when they're making, plans to invest in this in the region. Now, what do you foresee in 2021? I mean, if you were to make predictions ahead of 2021, a few people have said, I mean, some oil companies in Africa have actually debunked. Some of them have left. A lot of international IOCs in Africa are not as interested in the region as they used to be. ExxonMobil in Senegal, to name a few of them. But from your perspective, for 2021, what do you foresee?
I see more mergers and acquisitions going. I see more company consolidation. Okay. I see, because there are distressed companies out there, that many other companies will start to rationalize their portfolios and take over and merge and so forth. So I see that playing a role. We saw that with Anadarko as a case in point. They were big, and of course they got taken over. I suspect that will happen with Tullow, amongst others, going forwards. I also see that there is opportunity space for the savvy investor to really target where they feel they can play a role and where the government has been open and transparent. We found that with Zimbabwe, and there are many other countries in Africa that have been very good in that respect. And so, it's that is going to be the driver going forwards in terms of encouraging investment success.
Okay.
There has been a lot of some countries have tried to believe they can get a contract sorted out well in advance of actually encouraging investment. That's kind of not the way. You kind of need to encourage investors to come in first, prove there is something worth it, and then work with a partnership going forwards to actually deliver things jointly that can actually deliver wealth to the country and the participants in the country as a whole.
Okay, Dr. Swartlig, looking from the perspective of the West, now for post-COVID-19 world 2021, do you think investors would still find a few countries in Africa investment friendly, investment attractive? Like I did say, Nigeria has been able to set up a modular refinery, which is the first ever. Do you see this attracting investors to this region, excluding security problems and so many other issues like on the background that we have?
Absolutely. I think Africa, I've always been attracted to Africa. I've lived in Africa. Africa is open for business from what I've seen. The challenge has been around making sure that you can get alignment between the ministries themselves, the government, and the companies in terms of trying to develop a win-win for all parties. The governments need to encourage investors to come in and support them in moving forwards and move fast on decision making. That will be a key driver. And there needs to be a lot more joined up thinking as well. So for example, I can give you an example with Ghana. Ghana has 4 TCF of gas that's been found undeveloped. The existing operators in the country sell their gas to the government at about 50 cents. In some cases, they give it away free. Yet the government's now thinking of bringing in LNG and going to be paying a premium for that LNG from Russia. Okay. It makes no sense. There needs to be much more, that there is opportunity in the country that needs to be developed, that can be commercialized and is a win-win for all. We need to get away from this less joined up thinking. I saw that happen before in Argentina when I lived there, where the government of Argentina was bringing in gas from Trinidad at $11 and only allowing the indigenous companies, Apache when I was there, we were selling it for $1. It made no sense. It made no sense because obviously that price point gets passed on to the consumers, and that's unfair on all sides.
Okay, so I have a question here from Tabo Manana. So Tabo Manana, you tell us your name, your country, and your designation as well.
Yes, my name is Tabo Manana.
Go ahead, please.
I am from South Africa. I am a mechanical engineer, and I have the question for the doctor. Thank you.
Please proceed.
Okay. Yes. The question for the doctor was, Dr. Lake, does Invictus have operations or an office in Zimbabwe? And if they plan on doing that anytime soon? That is my question.
Yes. Thank you very much for that question, Tabo. Yes, we've opened up an office in Harare over a year ago, and I was part of that opening ceremony. We have been actually doing an environmental impact assessment in Zimbabwe recently, which we've just completed and has been signed off by the government. So we have approval now to both complete further seismic and drill wells. And through that environmental survey, we engaged thousands of different groups and communities. And as a result, we have a lot of people on the ground that are engaging people on a day-to-day basis. And so if you go onto the invictusenergy website.com, you'll see a lot of information there around what we've been doing on the ground, our office address in Harare. Our office is actually very close to the South Africa Power Pool central hub in Harare, which is the power pool that is the central electricity power pool for the whole of Southern Africa area, which is has tied up 12 member states.
Okay, thank you very much, Dr. Stuart Lake, the CEO, the Managing Director of Invictus Energy. I'd like to make welcome a very distinguished personality who has contributed, like I always say, immensely to the development of Africa and Nigeria's oil industry. He's the immediate past Group Executive Director and Chief Operating Officer downstream of the Nigerian National Petroleum Corporation, NNPC. He's the past Executive Director, ExxonMobil. He is the non-executive director of Fidelity Bank PLC here in Nigeria. Ladies and gentlemen, I am more than honored to have Engineer Henry Ikem Obi join us on this program. Thank you very much for coming, Engineer Henry Ikem Obi. So I'd like to take the next question. The next question will be from Lady Charity Oha Di Yuga. Lady Charity is from Switzerland and she is in charge of the Women International Networking Conference. The floor is yours, please. Lady Charity from Switzerland. Lady Charity, would like to welcome our very next speaker. The very next speaker who has doctoral complications with the time difference. So I would quickly like to do an introduction for Dr. Carol Knackley. She has worked with major oil and gas companies internationally, including ENI and Statoil. Now she has served the government of the United Kingdom as special parliamentary advisor on energy and the Middle Eastern issues. She has served as advisor to the International Monetary Fund, IMF, and World Bank. She is an active member on the governing board of the Natural Resource Governance Institute in the United Kingdom. She is a senior fellow at the Lebanese Center for Policy Studies, and she is a lead expert with the Geopolitical Intelligence Services. She's a lecturer at the Blavatnik School of Government. She is a lecturer with the Oxford University, a lecturer with the University of Surrey in the United Kingdom, and St. Joseph University in Lebanon. She is the author of Petroleum Taxation, and she co-authored Out of Energy with the former Secretary of State for Energy in the United Kingdom. She has worked on projects in more than 50 countries with exploration visits to the Arctic and North Sea. Dr. Carol Knackley is the founder of Access for Women in Energy. She sits on the ADIPEC Advisory Board and features on the Oil and Gas Council's list of top female executives in the global energy industry. Ladies and gentlemen, her views, her comments, and her remarks have been quoted by CNN, CNBC, Bloomberg, of course, S&B Global Plus. I'm very pleased to make welcome our speaker today, Dr. Carol Knackley. Thank you for joining us. So very quick question, Dr. Carol Knackley. Like I did say, your views, your opinions have been quoted by, major financial institutions as well as oil and gas institutions worldwide. What has been the exploration and production activity status in the United Kingdom, in Europe, and in London precisely?
Hello, everyone. Apologies for the confusion about the time, but Wafai, it's not my fault. The flyer says 3 p.m. UK time, which is not yet there. Anyway, we're here, and it's a great pleasure to join you, and apologies for missing some of the insightful discussion. Well, look, I mean, for the UK, just like any other producing country, investment has been hit badly. But I would say in the UK, there is an additional challenge that the UK North Sea, which is where the UK gets most of its oil and gas out offshore, is a mature declining province. So production reached a peak several years ago and has been in decline. So that adds to the challenge for investors, because investors look usually for substantial growth and size, big discoveries, and the chances of these happening in the UK North Sea are smaller and smaller as time passes. So that is on the negative side. And of course, if you're an investor, you want to see a growing province, you want to invest there. But so that would be just in terms of comparing to the growth potential. However, in my opinion, the UK has two very attractive features that explains why, or actually three, if I may add, and there are many others, but for me, the most important ones are as follows. First of all, you have a long-standing positive cooperation and collaboration between the industry and the government. So they have been working together. You don't have this attitude of us against them or them against us, or they are stealing our money. And interestingly, there is no national oil company, because in the UK, the main principle, I would say, that has been guiding policy is that you don't need to own to control. You can control through a strong, robust legislative and institutional framework, clear legislation, robust fiscal terms. So this is what you need in place to ensure good governance of the sector. And so that's what we have, the positive and strong collaboration and close cooperation between the government and the investors. The second very attractive feature, which tends to be overlooked, is that in the UK, the fiscal regime, the tax system that applies on oil companies is purely profit-based, which means you don't make profit, you don't pay anything. Unlike, for example, in Nigeria, you have lots of royalty and revenue-based instruments, which means irrespective of your profitability, you end up paying taxes to the government on each barrel you produce. And that makes a huge difference, because in the UK, your payback period would be, let's say, if you have a similar project between in the UK and in Nigeria, your payback period in the UK would be much faster and shorter than you have in Nigeria. And that is a very powerful feature of the fiscal regime. Add to that, so that is on the financial part. Add to that the availability of infrastructure. So if you look at the web of infrastructure available in the UK North Sea, it's amazing. So that also eases the pressure on investors when it comes to cost and technical aspects of investment. So that is in a nutshell that I am not too pessimistic about the, today the sentiment is really bad when it comes to the investment in the oil and gas industry globally. But the UK, even though it's a mature province, declining production still has some features which allows it to compete with other places when it comes to upstream oil and gas investment. There is, however, the risk is more in the mid to longer term, I would say, because there we're finding more aggressive climate change policies pursued by the government. So if you are an investor and you're talking to government who's saying, we want to kill the demand for your product, then you're not going to go, you're going to be hesitant in terms of committing your capital in that country. So I hope the UK, if they want, if that's what they want is to safeguard the North Sea for as long as possible, ensure the longevity of the industry, continue to bring in investment, then they have a delicate balancing act to perform between their green agenda and maintaining their oil and gas activities.
Fantastic. Thank you very much, Dr. Carol Knackley, for that incisive commentary on what is happening in the United Kingdom. Very quickly, I would like to make welcome. He was supposed to be our very first speaker, Engineer Chikezie Unwosu. We sincerely apologize as we learned that you were having difficulties joining on the program. We sincerely apologize. So he's the very first speaker on this platform, and I'll just like to run through his profile very quickly. He is an experienced senior executive with 3 decades, more than 30 years of continental and international experience in the management of upstream oil and gas projects. He previously served Shell International Exploration and Production. He was Global Principal Technical Expert, BV Netherlands. He was also the Subsurface Development Manager in Qatar, EOR. He was the Value Assurance Consultant with Shell International. He's worked as the Regional Manager, Sub-Saharan Africa, SIEP and BV. He's the Senior Front-End Project Manager, Shell Nigeria. He was the General Manager Development, Adax Petroleum, where he delivered 5 major upstream oil and gas projects. He was the Deputy Managing Director, Adax Petroleum Nigeria. He was a member of the Board of Directors for both Adax Petroleum Development Nigeria and Adax Petroleum Exploration Nigeria Limited. He is a member of the Board of Directors, Tolier Energy BV, the Netherlands. He's a member of the Society of Petroleum Engineers and NAPE, National Association Petroleum Explorationists. He is currently the Managing Director and Chief Executive Officer of Walter Smith Petroman Oil Limited and Walter Smith Refining and Petrochemical Company. Very distinguished ladies and gentlemen, he delivered the very first modular refinery in Nigeria, and of course, West Africa's largest amidst the COVID-19 pandemic in October 2020. I am very honored to have you join us on this platform, Engineer Chikezie Unwosu. Good afternoon.
Good afternoon. Can you hear me very well?
Very well. I can hear you clearly, sir.
Okay. Good afternoon, and thank you. I probably had the same problems as Carol in terms of the timing.
We sincerely apologize.
It shows up a few minutes before the start time, but thank you for this opportunity to speak about whatever topic that you so desire. So I'll pass it over to you. Thank you very much.
Thank you very much, Engineer Chikezie Unwosu. So I'd like to begin with you very quickly. Dr. Stuart Lake has thrown so much of light on possible investment opportunities in Africa and, of course, what is happening globally. Dr. Carol has highlighted, the status of exploration and production in the UK and Europe. Being a seasoned professional in the upstream oil and gas industry, what are your views on the current situation of COVID-19 exploration and production in Nigeria and, of course, across West Africa?
Okay, thank you very much for that. And I'm glad I listened to Carol about the UK environment for oil and gas. I missed out Stuart Stone, so I hope I don't repeat a number of things he said.
Okay.
Now, Nigeria and Africa are in a strangely unique situation with respect to oil and gas. It's not, and it's exacerbated a little bit more because of the COVID-19 pandemic. Ordinarily, if you listen to what Carol said, we have a regressive taxation system in our fiscal terms, and even in the new one, it's still the same thing. Whether or not you make a profit, you pay a royalty to government. So that's the environment in which investors have to look at. In addition to that, we have significantly high operating costs and capital costs. And a lot of it is around the transparency of the governance of the oil and gas industry. There's also the part, around the security situation in the country. So when you look at the parameters for investors in the oil and gas industry in Nigeria, you wonder why they put their money there. And I'll tell you why. With all these challenges in this environment, we have some of the easiest to locate and easiest to produce hydrocarbons, whether it's oil and gas. So we have that advantage. However, that advantage will go away very quickly if we're not aware of what is happening worldwide. Now, let me explain about the COVID-19. So I'm saying that in the macroeconomic sense, within the oil and gas industry, you have all these fiscal challenges within Nigeria, cost challenges and all that. Then impose on top of it COVID, which had two major impacts on the Nigerian oil and gas industry. One, the OPEC++ cuts, and these were spread to independents and major oil companies, but this was to shore up the oil price. But effectively, some of the small independents could have gone out of business if some relaxation did not happen. Now the oil price went down, the OPEC++ cuts happened, and the oil price went up, stable around $40 per barrel. I use that number. However, the cuts were significant to these companies that actually have huge bank loans that they have to pay back. So that was a massive challenge for them. Now, on top of the issue about the OPEC++ cuts, there was no palliative coming from the Nigerian government to support the small independents. There was nothing. We asked for tax holidays, waive royalty, do something so that we can at least survive, and that did not happen. And we continue having those conversations with them about the need for this to happen. So the COVID period, if anybody survived, it was out of resilience. It's a much used word. It was out of resilience that survival happened. What needs to start happening going forward is that the fiscal environment has to change. The business environment has to change. It's not about COVID. It's going forward. The business environment has to change in terms of security, and I have some ideas about how this will happen. And finally, we have to drive down the cost of doing business. So even if you have the best hydrocarbons, you have easy to locate hydrocarbons, if you don't do what you need to do properly now, in terms of bringing down your costs and creating the necessary business environment for investors to bring in their money, and it's urgent because oil and gas, investors bringing money into oil and gas is not going to be there for a very long time. You can see what's happening with respect to climate change. It is going to disappear very quickly. Africa needs to get on top of this. So we need to do things very quickly to change the environment in which investors and how they look at Nigeria and the African continent. Thank you.
Thank you very much. I have another question for you, Engineer Chikezie Nwosu. So you delivered Nigeria's first ever modular refinery, and I'm quoting the Executive Secretary of NCDMB. He said, our very first refining project, and we got it right. So in your own terms, what does this portend for the region, West Africa? I put out the same question to Dr. Stuart Lake. I'd like to hear your own perspective as well. Devoid of any sentiments objectively, what does this portend for West Africa and Nigeria, the continent as a whole?
So thank you very much. One of the things that the continent has to do in this race to the transition, the energy transition, is to start consuming energy. Because the more you consume energy, and I mean refined products, gas, the greater the impact on your GDP. I just came out of a couple of sessions where it's clear that for every dollar you make by exporting this oil as a commodity, you can make $5 to $6 in terms of GDP growth by consuming that commodity within your nation. So that's the path Walter Smith has gone on. It's around consuming this, and refining is one of them. Gas, I'll talk about that later if I have an opportunity. So I don't know what Stuart said, but what I know is that the Africa Continental Free Trade Agreement should be able to open up the boundaries within Africa for some of these refined products to be exported to countries with the logistics margins being much smaller. So you don't have to spend so much money than you import it refined product from Europe. So that is what I hope it will do. And therefore, what needs to then happen is that apart from the growth of modular refineries, there has to also be large refinery projects. So for example, the Dangote refinery is one of them.
Okay.
Now, there also has to be collaboration across Africa. For example, Equatorial Guinea has called on us, Walter Smith, to come and take a look at what we can do in terms of modular refining in their country. So it's a major area that Africa needs to play in right now from the point of view of producing and consuming these refined products within Africa.
Okay, thank you very much. I would also quickly like to acknowledge the presence of the senior staff and official from the Department of Petroleum Resources here present. Thank you very much for coming. The presence of the Honorable Deputy Minister for Energy, Republic of Ghana, Dr. Mohammed Amin Adam. Thank you very much for coming. The presence of the former Minister of Finance, South Sudan, Honorable Mo Andrew Thick. Thank you very much for coming. So the next question would actually be for Dr. Carol Knackley, the CEO of Crystal Energy. Dr. Stuart Lake had given us an overview on his perspective about investment in Africa. He had said investors would continue to find Africa as a very attractive investment destination. But from your own perspective, you've worked on the Arctic Sea, you've worked on the North Sea, you've worked on more than 50 exploration countries in Africa, in the world rather, but I'm not very sure you have done so much on the continent, although I had seen, your records in Tanzania, to name a few. But from your perspective, do you think investors would continue to find Africa as a very attractive destination for exploration and production activities?
Actually, Wafai, I've done lots of work on Africa, and I remember the first time I went to Africa, it was in maybe 11 years ago, 12 years ago. It was on an IMF mission, and when I arrived to Freetown in Sierra Leone, the first thing I spotted at the port was the Lebanese flag, and I come from Lebanon. So I felt pretty much at home in Africa, and I think Africa has a great potential, not just in oil and gas, but in all energy resources, renewable energy, you name it, even minerals and metals, which will be needed to fuel the energy transition. So there is a great potential, but then you see that there's a lot below ground. But when you look above ground, you see a kind of mismatch. And that mismatch means that there is underinvestment in the continent. So there is potential there, but if there's something I learned actually from experience in other countries, the availability of the resources below ground does not dictate production performance. Let me give you the example of Venezuela. It's sitting on the largest proven oil reserves in the world, and yet they are struggling to sustain their production for all sorts of reasons. I know politics play a role, but I would say policies equally play a role because of something that happened not now, but 15 years ago when late President Chavez came to power and changed the legislation aggressively on investors. So I definitely believe there's a great potential in Africa. But again, it has to be, today it has to be, because let me put it this way, COVID-19 brought many challenges, but it also amplified existing problems. So if you started the year from a weaker position, or if you already had some structural problems that you have failed to address before, then your problems are going to look much bigger under COVID-19. And with Africa in particular, of course, I cannot generalize because you do have a very big spectrum. Some countries are better positioned than others. Mm-hmm. But if there is one area I would emphasize on, because that's perhaps the main area that is within government control, is government policy vis-a-vis investors, because investors know that what is below ground is dictated by nature and geology. Oil and gas prices is not something that anybody can control. Even OPEC Plus, mighty OPEC Plus, are not able to fix a certain level of prices. But when it comes to the burden of doing business, the cost of doing business, and mind you, it doesn't have to be only government take. You can find sometimes government taking maybe 80%. I mean, Norway, 78% goes to the government in terms of taxes, but actually investors still favor Norway over another country which take a fraction of that. Now, because if we go back to this issue of the fiscal terms being too regressive, and I don't use technical jargon, but for those who are not familiar, a regressive system is a system that affects investment right up front. So right at the beginning of your investment, whether before production starts, let's say in signature bonuses, or state participation, for example, to royalty when production starts. So whenever you have your fiscal regime is built on these terms that hit you upfront, that as an investor, the investment proposition will look much less attractive than if you go to a place where the regime, yes, contains some instruments such as royalty, but it puts more weight, more emphasis on profit-related instruments. Now, why I emphasize this issue today, why I'm bringing this concept today, again, I go back to COVID. What COVID has done to investment in oil and gas, forget about just cutting capital expenditures, what that would mean in terms of future supply, but has simply made competition for capital from host government perspective much tougher. So you're having governments, maybe neighboring countries or countries that are very distant apart, they are all competing for the same capital, which has become much more selective because companies are struggling to achieve certain rate of returns and they want to minimize their costs and reduce their inefficiencies. And they would be very careful in terms of where they would allocate that capital for the many years to come. So this is where government play a very important role, particularly in Africa, because there, one thing I found, we mentioned Nigeria. I contributed to providing advice to the government on their draft fiscal policy before they published a revised version of it recently. And I don't think my advice was heard because I was recommending simplification of the regime, non-discriminatory treatment between investors, more profit-based instrument, and yet governments feel that they would lose control if they would go down that route. But if you just narrowly focus on what's happening in your country without taking consideration the changing macro environment, the global scene for oil and gas, then unfortunately, the investment proposition in your country is not going to take off as you hope it would be. Of course, there are investors that would still come to the country, but it's not in the same way that you want to achieve, such as bringing more capital and boosting production in the longer term. So to sum up, in Africa, I believe there is a great potential, but the fact that this potential has not been exploited properly tells me there is a problem elsewhere, particularly on the policy front.
Okay, fantastic. Thank you very much for explaining further on that particular subject. I'd like to come very quickly to Engineer Chikezi Nwosu, and then I'll come to Dr. Stuart Lake after you. Engineer Nwosu, Dr. Carol, it's always said that government has no business doing business, but government has to create an enabling environment for businesses to thrive. You have been in the oil business for more than 30 years. What would you like to see in terms of policies? In Nigeria, the PIB, the Petroleum Industry Bill, has just recently been passed, which shows the depth of seriousness that we are, imputing in the industry that had, tarried for such a long time. But now, if there are like policies, rules, regulations you would like to see across Nigeria and across the continent, what would some of these policies, what would some of these rules, what would some of these regulations be to make an environment more attractive for investors?
So I thank you very much, and I'll try and cover as much as I can upstream, midstream, and downstream.
Okay.
So I wish the government had listened a little bit to Carol. At some time, I was also holding during, I think, the Ibe Kachuku regime to, provide some kind of input through the oil producers trade section into the petroleum industry bill. And the biggest challenge, just like Carol has explained, is about the regressive nature of that policy. So although people are hailing the PIB, and I've looked at it, and basically for onshore and shallow offshore assets, although it's still regressive, so it's even a little bit more regressive because they've increased the royalty bands. Yeah, what they've done is to reduce taxes, but that doesn't trigger the kind of foreign direct investment you need, because investors coming in will first be hit by the regressive nature of that fiscal regime. So they're paying higher royalty. Even deep water above 1,000 meters that wasn't paying royalty before, 0%, and which was very attractive, is now hit with the royalty regime as well. So you need to understand that as much as people are hating the PIB, and what I'm saying is pass it, yeah? However it's structured now, pass it, but it needs to be modified. Now, what government's challenge is that they cannot believe that the pie will get larger. See, that's the problem. That by creating the right environment, more foreign direct investment will come in. and therefore you grow the pie. So even if you don't have the upfront royalty take, you get a larger share, both from taxes and from your profit share in a much larger cake. So it's building something bigger. Somehow we have to get to the point where that is demonstrable. And maybe the first step is first pass this PIB and let's see what happens. And then we have to adapt it. So the first thing I'm going to say is that the current fiscal regime contained within the PIB is not sufficient. Yeah, it needs to change its regressive nature for it to attract foreign investment.
Okay.
Then I'll go to the midstream. Do I have time?
Yes, please. You have time.
Okay. So let me walk into the gas area, because I think that a lot of investments will have to come into the gas area. So the fiscals, everybody keeps concentrating on the oil fiscals, but the gas fiscals are not even better. Yeah, because you still have a royalty on gas. And this is an area where you don't have the infrastructure. We're building it up, but we don't yet have it to distribute the gas. You don't have the end buyer's ability to pay for the gas. And yet you impose this kind of regressive fiscal terms on the gas as well. So this also needs to change. There should be no royalty on gas until we get a gas business and a gas market running. And even then, I'm not sure that it would be more important to raise more government revenue through royalties and through profit sharing and taxes as well. And the attendant impact on the economy. You know, people have to see beyond the immediate impact of the commodity, but the attendant impact on the economy, GDP growth, is also wealth creation for the government. It's also revenue for the government as well. It's not just about forex earnings from oil and gas. And then when you come to the downstream, a lot of policy. So the policy around gas also has to change. Yeah, there's the network code work that is going on that's been launched. That's very good. There has to be a willing buyer, willing seller arrangement. That transition has to happen very quickly, because that's where the investment in gas is going to drive the next decade of investments in oil and gas in Nigeria. If you come to the downstream, the critical challenges in downstream, and I'll focus a little bit more on refining, is that refining margins are very low. Yeah, but one of the things that the refinery does when situated close to an oil producing asset is it takes away all the security challenges that you have of vandalization on the pipeline. So you can immediately pipe the crude into your refinery. Visible, short distances, easier to survey. So surveillance is much easier there. You also avoid all the crude handling charges on the big major pipelines that go out to the terminals for Cardos and Bonny. So that's a major this thing. It amounts to something close to $6 per barrel for some small independents. That's a huge cost to them. Yeah. So in the downstream business, these modular refineries, larger refineries located around the source, government has to have policies to encourage that to happen. And what I mean by that is, Walter Smith is lucky.
Okay.
We have our own upstream asset. So we can produce and refine. It's our own oil. A lot of other refiners are not that lucky. And so government policy has to be such that they force whoever it is that is producing this oil, because we want to refine it, to give this oil as feedstock, because it's a win-win. It saves them some of these costs and challenges I'm talking about, and it provides a much higher refining margin if they're able to negotiate the right transfer pricing. So government has to get involved in that crude feedstock supply process, yeah, with all the other producers. The last part with downstream refining is actually what you pay for, and this is also for gas and power. We deliver, these products are delivered and sold in Naira. So even though we're refining, we're selling in the Nigerian currency. And yet, the upstream feedstock is bought in dollars. And your business can disappear very quickly if that forex volatility hits it at the wrong time. So the last part of what government needs to do to encourage, there has to be a policy where at the very minimum, gas purchase and oil, crude oil feedstock for domestic consumption is priced in Naira.
Thank you very much. Very quickly, I'd like to announce the presence of the Group Managing Director of Rain Oil Nigeria PLC, one of Nigeria's wholly indigenous downstream oil and gas companies. And I'd also like to announce the presence of the Communications Director for Rain Oil Nigeria PLC, Chiamaka Udoka, as well as Engineer Gabriel Ogbeche. We are happy to have you here. Thank you very much and you're welcome. So while Engineer Henry Kemobi is preparing to take a comment on modular refinery, I would like to take a quick question for Dr. Stuart Lake. Is David Nadi prepared with his question, please?
Good day, everyone. My name is David.
Thank you.
Yes, I am a Nigerian and I work in the United Arab Emirates as a senior specialist in CMP, that's contracts and procurement.
Okay.
In this discussion, I've really had a lot about the potentials of Africa, particularly Nigeria. Everyone agrees that the potentials are there. However, Africa's problem is a well-documented one in terms of exploiting the huge potentials of oil and gas that we have in the continent. Like Dr. Carroll said, there is a lot of mismatch in terms of potentials and the benefits of the oil, and we cannot see it. It's not, you can't feel it, even though we have that. So my question quickly goes to, I would prefer that the speakers, any one of you can react to this, because if we don't address the problem of Nigeria and Africa from the roots, we are going to be discussing about the forecast of 2021 and still the impact will not be felt when we get there. The government's policy, just like Engineer Chikezie has mentioned, has really been one of the problems that has affected the potentials and expected impact or positive impact of exploitation of this oil and gas potentials that we have, and making it work for us as African nations. What is the international community doing to help us with the mismanagement of the resources? Because it's about creating the right environment for investors to be confident of coming to invest in this continent. What is the international community doing to help us? Because we need a lot of help. And I am very happy that a lot of government officials are here to also hear what we are talking about, because we know the problem and we want it addressed. What is the international community doing to help us? Thank you.
Okay, I'd like to begin with Dr. Stuart Lake. Please, could you start with a response to the question, what is the international community doing to help us?
Well, the international community is very diverse, of course. I think historically, the UK has played quite a strong role in terms of providing support and finance. USAID has played a big role in Africa in terms of targeted investments and targeting help. Of course, the World Bank it plays a large role in terms of helping many African countries get the financing in place and also provide the regulatory insight in terms of encouraging investment and transparency. But it is a challenge, and because David is obviously in the UAE, that tells a little bit to him actually leaving Africa and actually working elsewhere. The challenge in Africa is not insurmountable, but again, it's all about, as I talked about before, transparency, contract sanctity, quality contracts, working in partnership with companies rather than fighting against them. There's a win-win for all sides on all this side of things. And so, we have a role in the companies to play in terms of working with the governments, helping the governments understand how we can make it a win-win for all sides. At the same time, we also need the international community, the governments themselves, government to government, to give advice and support in terms of how that can work for all sides and creating a win-win.
Thank you very much. So I have a question here from Avi Naha. Avi Naha, could you quickly do a brief introduction of yourself? She's a contract specialist from London, and she works with the Liberian Chamber of Commerce as a non-executive director. So your question for Engineer Chikezie Nwosu, please.
Hi, everybody. Sorry for my late attendance. By way of introduction, my name is Arvi Nahar. I'm a contract specialist. I have a vested interest in the oil and gas industry, especially in Africa, and some commercial interests. So really, my thoughts, we understand and appreciate the bedrock of oil and gas is always financing. I'd really like a take on those operators in country. Have you seen competitive bidding changed? Has a process changed? Has a tendering process changed? Do you find that more firms are actually joining their efforts, joining hands, and some mergers and acquisitions to actually bid for larger work? Do you see what I'm asking really is there a trend, a change in trend regarding contracting for work?
Okay, thank you very much for that. I haven't seen that much of a trend in terms of that kind of a larger scale collaboration between service providers to provide services under contracts. But there are some habits that are being enforced or encouraged through the Oil Producers Trade Section and the Independent Petroleum Producers Group. We're looking at, so I've got a very good friend, the managing director of Seplat, the new one, Roger Brown, who says that we have to start thinking like one large oil company. Yeah. And basically, it also means that if we start doing that, we can start pushing for the service industry to start also thinking about a lot more collaboration and bringing services together instead of all the rivalry that is going on, in the so-called competitive bidding space. It doesn't mean that bids are not going to be competitive. It just means that a wider range of services can be provided. That economy of scale can bring down costs for the operators. And so if they're not doing it, they are going to be forced to do it once the operators start this collaboration portal. So again, I haven't seen it large scale. I've seen it small scale with a couple of people. There's been conversations around in the shallow offshore area of Nigeria coming together with respect to vessels, supply vessels, security patrols and things like that, and forcing the service companies to come together, those providing services, in such a way that they can provide services across port for all the operators in that area of operation. So a lot of that is happening slowly, but it's forced more by the operators than by anything the service companies are doing to come together on their own.
Okay, thank you very quickly.
May I go back to David's question?
Yes, please.
Because he said something I often hear about, what can the international community do to help us? There's a lot of help out there, but what matters is that if there is an appetite in the country to receive that help, and whether people are willing to listen and not just, provide lip service to whatever international advice that is out there. But allow me, please, to widen the discussion, because it's very important to take into consideration not just a micro perspective on which project to invest in or which country to invest in. We have to acknowledge today, and governments in Africa have to acknowledge today, that there are two very important developments that have changed oil and gas markets fundamentally. First of all, you had the shale revolution in the US that brought in this massively flexible supply. Okay, it's not terribly big if you want to look at the margin, but it has ability to change with the changes in oil prices quite rapidly, unlike conventional oil. And that has put a lid on any increase in prices. At least I'm talking about pre-COVID. Now is after COVID, I don't think the share is going to go anywhere. So that's one thing to remember. The other thing that we have to keep in mind is that the world is moving gradually away from oil and gas. I'm not saying it's going to happen tomorrow, but at least if you look at the aggressive climate change policies pursued, at least in the developed economies in the richer world, you would start to think twice. If you were like Nigeria, for example, where you are sitting, especially on massive potential, ultra deep and very ultra deep water, these are high cost resources and you don't want them to be stranded there. And that takes me to the third point about the appetite for help. And that goes to a much bigger problem that you have commonly among major producing countries in Africa, the lack of economic diversification. We are clinging on so tightly to the oil and gas sector because this is where government revenues come from. This is what drives the economy. And that's why governments cannot let go of, very regressive instruments or moving to a more lenient fiscal term, for example, or more attractive policies for investors. Whereas if they succeed in implementing much needed economic reforms, in my opinion, they have better chances at staying in the market for much longer, even when that market shrinks as demand, for example, peaks in the next years or so and competition intensifies between producers. So it's a much more broader discussion than looking at individual projects in individual countries. There's a trend that's happening out there, and you don't want to miss, on that.
Okay, thank you very much, Dr. Carol.
Do you mind if I give a slightly different perspective?
Yes,
I understand Stuart and Carol, but let me give an African perspective. So the question about waiting for the international community, what will they do for us? Well, let me just point out that the international community does not form or enforce policy in Africa. So there is quite a lot that Africa has to do for itself. For these investments to come in, not aid, for these investments, we have to create the enabling environment. It's about policies. Look, it's strange that Africa as a continent, 1.2 billion people, huge mineral resources, agriculture. Carol was on the right path. It's not just about oil and gas. There are huge opportunities here. But you know what is lacking is the fact that every single African country seems to treat the other African country as a rival. Okay. There's very little around real cooperation. We talk about the African Union. I mean, I know they go there a couple of times every year and they say certain things, but I'm yet to see something that forces collaboration within Africa. I'm happy about the Africa Continental Free Trade Agreement, trying to do that. But across board, Africa has to start thinking not as a continent, but as a union. Remember, Europe has done that already. And let me be clear about certain things. The global dynamics, when people talk about global dynamics, I talk about regional dynamics. If you look at some things around energy and the transition, globally, the time frame has been set in the European Union. Well, that's where they're going. That's how investors are going to be thinking, because some of the major investors are coming from the European Union. That's where you're seeing most of these investors. They are thinking energy transition. They are thinking climate change. Africa is underdeveloped, and Africa is thinking differently. And that's why I talk about the regional dynamics. We're thinking consumption. We're thinking consumption to grow our GDP. So our energy transition, it will come. So we have to keep an eye out on what is going on there. But internally within Africa, we have to make sure that we melt down all the boundaries of trade between each African country, of rivalry. Competition is fine, of rivalry amongst African countries. There are all sorts of spots around Africa where there are major areas of minerals, gold, can be established, the agriculture, other areas, oil and gas, maybe Nigeria, other regions. But these are supposed to be centers of a hub within Africa where other African countries feel the ease of trade, ease of movement between these boundaries for whatever investments they want to make. So while the international community, we're looking at them in an advisory capacity. So let me give you an example. Walter Smith wants to build an industrial innovation city. Who are we relying on? The United Nations Economic Commission for Africa and the United Nations Industrial Development Organization. Are we looking to them to fund it or to change the policy within government? Absolutely not. So there's the advisory capacity from these international organizations. That will always exist, the World Bank and all that. But we need to do it ourselves in Africa to melt down these boundaries and ease trade and movement in Africa with all the mineral resources and human resources we have to make things happen for us. So it's not about thinking global, it's about thinking regional.
Okay, thank you very much, Engineer Chikeze. So very quickly, I'd like to come to Engineer Henry Obi, the past COO downstream of the Nigerian National Petroleum Corporation, NNPC, and of course, he's currently on the board of LNG as a director and Fidelity Bank as well. So I'd like to come to Engineer Henry Obi, a comment or two from you on the just concluded modular refinery that has been commissioned in Nigeria. And shortly after Engineer Henry Obi, I'll come to Dr. Stuart Lake once again, please.
Good afternoon to everybody on board. I think it's a very commendable. We must give recognition to Walter Smith for this milestone, very significant investment in the sector. I think modular refineries contribute to the energy pool for Nigeria. It takes everybody getting on board for us to achieve the overarching objective of being a net exporter of petroleum products, for instance, and being secure on the energy front. So I think this is a very good step in the right direction. And I hope other producers or other refinery licensees in the sector are encouraged to continue to invest. Thank you.
Thank you very much, Engineer Henry Obi. I'll still come back to you very quickly, Dr. Stuart Lake. When this meeting started, you actually emphasized very categorically on the projects you're coming up with in Zimbabwe, which happens to be the largest. Zimbabwe, you're the first. So Invictus Energy is actually the very first company that is exploring in the country Zimbabwe. So I would like you once again, very quickly, just give us an overview and a highlight of what has been happening with Invictus Energy in Zimbabwe, the exploration activity, the success rate so far.
Yes, thank you very much. I mean, what we've done is we've actually got into an acreage that was left by Mobil, which hadn't been touched for a long period of time. And we went back in about 3 or 4 years ago. We activated a reprocessing of the seismic that was acquired by Mobil at the time. We see on that seismic in the reprocessing results amplitudes that give us some encouragement about reservoir seal pairs and possible hydrocarbons. We've also done a lot of on-the-ground work where we've confirmed there are more seeps than were originally recognized. And our work program we've done to date is around $6 million of value. We've done this over the last 3 years. We've also acquired lots of new gravimetric data and reprocessed that data. And what we've done is we've donated that data to the country as a whole. So for all the mining communities and mining groups, they can access that data from the Geological Survey for free. Because we want to see other investors investing in other parts of the business across the sector. As touched upon by Chikeze, agriculture is a big thing in Zimbabwe, as much as the mining sector. The mining sector intends to expand to $12 billion of investment over the next few years. And gold is going to play a big role in that. But the miners themselves need to have access to more up-to-date quality information. And we've provided that for free in country. So we've been very happy with doing that because we feel that's a corporate responsibility as a citizen to help them in terms of encourage investors and encourage movement in the country. Going forwards, we plan to do some more seismic and thereafter, hopefully the end of next year, we plan to drill 2 wells back to back. These will be the first wells that are drilled in the country since actually 1977. When the Rhodesian regime had drilled a well long ago somewhere else in the region. And so we have a lot of excitement about that in the coming years. And the government have given us a further 3 years of operations to move forward with. And in fact, today discussing petroleum agreement with us, which hopefully we can move forward on in the coming weeks. So. Okay. Very encouraging from an investment climate viewpoint, and the government have been very open and transparent. And as I say, contract sanctity, openness, working in partnership is key to delivering the business as a win-win for all sides.
Thank you very much. So I'd very quickly like to announce the presence of Engineer Elizabeth Rogo. She's the president for East Africa at the African Energy Chamber and the CEO Savo Oil Field Services in Nairobi, Kenya. I'd also like to announce the presence of Amari Stringfield, the CEO of Boas Capital Services in Atlanta, Georgia, United States of America. The presence of the Special Advisor Technical Matters to the MD Oil and Gas Free Zones Authority, Obong Jackson. Very quickly, Avinaha, you said you did have a question for Dr. Stuart Lake, so I'd like you to take your question.
Sure. I guess it was more of a generic question regarding technical expertise and how you actually, consider, again, back to the competitive bidding sector. I guess my overall question is, as Africa as a whole, do you think there will be a slowdown for contractors, consultants like myself? Do you think there'll be a slowdown in productivity or contractor engagement and contracts going forward?
Well, I'll give a response to that. First of all, I think the whole way of working has opened up everyone's eyes. There was historically people traveling all over the place, face-to-face negotiations. The reality on the ground is this whole COVID crisis has forced a new way of working. You know, there's a whole drive towards digitalization of the industry. There's a whole drive to alternate ways of working. I've seen many companies actually, they've rationalized their staff, they've downsized substantially. They found they can do more with less people going forwards. And so I think that contractor space and everything else is also going to change. I think the M&A market, as I say, in the oil and gas companies, there's going to be lots of mergers and acquisitions going on and rationalizations we saw back in early 2000. I think we're going to see that again. But in addition to that, I think we're going to see it also on the suppliers, services sector as well. But I also think there's opportunities on that side as well for win-wins in terms of partnering and partnerships. I saw that big work in Ghana with Aker Energy, bringing in regional partners on the services side. It can be done across the board in very many sectors, and I think there's opportunity space there. But I think the whole way of working as our business has changed, and the mindset has changed. The ability to still get business done, even with the current challenges, has happened. We've seen that happen in Zimbabwe very successfully. And I see that whole way of working going forward is also changing. I also see, you know, the Internet of Things and everything else is opening up opportunity space for many people, AI, digitalization, and also smart bidding arrangements, smart contracting going forwards. So I think the whole thing's changing, and I'm sure my other co-speakers could speak to that even more in granularity.
Okay, thank you very much. Engineer Kichikezi, would you like to comment on Avi's question?
Yes, I totally agree with Stuart. And the areas I'd like to emphasize, of course, he's made clear the point about the fact that the environment is changing with respect to how even contracting processes are carried out here. The most important part for me is the area of collaboration amongst the service companies. And, you know, let me try and give an example of this here. I've gone into a habit of doing a lot of my projects with a turnkey approach. So typically, if you were going to do well construction, you'd have somebody providing mod services. You'd have another company providing formation evaluation, logging while drilling, you know, and bits and all that. And what I've tried to do is I ask for collaboration amongst these companies to form some kind of consortium. Yeah. And therefore you have consortium competing against consortium. So there's still, you know, that competitive bidding, but it's not breaking down these services into the little disparate, you know, parts of it. I'm looking at well construction as a project. So why should I worry about the interfaces between the guy who is doing the drilling, the guy who's doing the mod provisions and all that? So that's the direction I think things are going to go. Yeah, that a lot more of these enforced and forced collaboration is going to happen. And therefore you have these larger service providers competing against each other. And you can see that even the Schlumbergers and the Bakers are looking towards this as well. They're trying to have, you know, services across board. Now, Stuart mentioned something very key about it as well. Yeah, we would also like, so especially smaller independents, would like these big service providers to help us with de-risking the projects as well. The IOCs, the big ones, have ways of de-risking their projects. But we want to look at de-risking the projects from a supply chain management point of view. Yeah. So come in early while we're designing the project, come in with all these services, and let's look at what we're trying to achieve. Bring in all your expertise, your advice as, you know, a contract analyst, and let's see how best we can do it. And that's what we're looking towards.
Thank you very much. So we'll be rounding off with this entire meeting in 10 minutes. Very quickly, I'd like to take Dr. Carol Knackley, CEO of Crystal Energy. What factors do you think investors should consider when they're making their final investment decisions, FIDs, in 2021?
Well, I mean, look, we go back to the basic rule of investment, of balancing risk and reward. And, talk about oil and gas investment in conventional oil, you're committing to something for the many years to come. So it's not just about what 2021 is going to bring, but what's going to happen in the many years to come. Because, we mentioned contract sanctity, and the main feature of that is the stabilization, stability of the contract terms, and not, having governments changing the terms in ad hoc way. Of course, you would allow some flexibility, but you also need to think to keep the longer term perspective in mind. So investors are going to be much more selective than before COVID. They will still be under, COVID, even if we have the widespread mass vaccination around the world, and nobody's expecting that to happen fully next year, then we have to be realistic. There are some structural damages that have happened within the global economy and, of course, individual economies. I mean, think about the poor nations in Africa and the high public debt that they have. But also, I'm thinking about the oil market. People are talking more about, the market not recovering to pre-COVID levels before several years from now. So it's not going to be, 2021, you just, extinguish the fire and that's it, everything going to go back to normality. So I would say investors will still be very cautious in terms of where to allocate their capital. They want to secure the most attractive rate of return, and they usually have a certain threshold that they want to meet. Anything that does not pass that threshold, they simply chuck it away. And especially now, they are much more selective. That said, let me add, because this is perhaps one of the last few events I'm running for this year, I would like to add on a positive note, because I can't wait for 2021 to come and turn the page, at least partially, on this COVID-19 phase. There is a silver lining in what's happening today in lower oil price environment, which tends to be overlooked in most discussions. That is cost deflation. We find that costs follow prices with a time lag of 6 to maybe 18 months, depending on whether you are onshore to deep water expensive projects. And we're already seeing this kind of bringing optimism to the industry that yes, we are going to be more careful, but there is a silver lining, that is a low cost environment that started to kick in and perhaps would become more notable next year. But again, we go back to the importance of government policy, that you don't want to compensate for that with tighter fiscal terms, tighter regulations, anti-investment regulations. So you have to ensure that this is a delicate process. And again, we go back to the delicate balancing act between the nation's priorities, government's economic needs, and attracting investment. And even though in the short term, they might look like conflicting, in my opinion and experience of more than 20 years, it's a win-win situation if you got the various parameters right.
Okay, fantastic. Thank you very much, Dr. Carol Knackley from Crystal. Very quickly, I'd like to take a question from Olumide Ajay. Your name, your designation, you have just 10 seconds. A quick question for Engineer Chikeze Nwosu, please.
Yeah, my name is Olumide, and I'm an LNG analyst in London. My question is for Mr. Chikeze. First, congrats on the modular refinery. So in terms of managing the foreign currency risk, obviously we've seen the Naira depreciate within the last 3 weeks. How do you manage that? Because which I guess is one of the most tricky parts of your business now.
Okay, so we are lucky we can leverage on some of the things that government has put in place. Fortunately, we can access the NAFEX import-export markets, where the rates are much closer to the CBN rates. But of course, there's limited liquidity in that market, because the exporters, the ones who can earn foreign exchange, if you ask them where they were going to sell their money, they wouldn't prefer to go to the NAFEX market unless they are forced to do that. So there's a little bit of a challenge to how much you can access in that NAFEX market. So at the moment, there are two things that we're leveraging on. We found out that within the West African sub-region, we can sell some of our products, the refined products, and earn US dollars, strangely enough. And the other part is that we can access some of the dollars from the NAFEX market. That's how we're managing. But of course, the rest of our Naira sales, if we want to pay for crude purchases, using that, we have to go to the normal market everybody goes to. So that's how we're surviving.
Okay, Thank you very much, Engineer Chikezie Nwosu. So would like to take a quick question from Olabisi Akadiri. I hope he's ready. Olabisi Akadiri, your question for Dr. Carol Nakle and Engineer Chikezie Nwosu, please.
Yes, good afternoon. I've been enjoying the discussion. I'm a ex-Shell GM, retired, and I'm now consulting in Europe. My question rides a little bit on what's been discussed before by both Carol and Chikezie. The energy transition, it seems to be accelerating, and rather than continuing to confront it as a threat, because this energy transition is actually putting pressure on foreign direct investment, especially to oil and gas in Africa. We saw what happened with the Norwegian Sovereign Trust and the recent announcement by UK to reduce investment in that area. Do you see a way for African hydrocarbon-dependent economies and companies to integrate renewable energy in their value chain and perhaps help to reduce the dependence on commodity-based exports?
Carol, do you mind if I jump in first? I know BC Kadiri, so...
No, please go ahead. I was looking for the unmute button, so please go ahead.
All right. So BC, that's a wonderful question. And here's my advice. Again, I talk about regional dynamics, yeah? The transition is coming and we have to keep thinking about it. And I'll put it in perspective of what Walter Smith is doing. So right now, we're trying to consume produced oil by refining it. We also have a 300 megawatts gas to power license. So we think that gas will be the fossil fuel that is in the middle of the transition. So we'll go from the heavier fossil fuels or the dirtier ones to gas as a transition fuel. And then we have to go to renewables. So at the moment, our 300 megawatt power plants, we're going to use that to transit and reduce our carbon footprint by going away from all the high-end, oil. We don't use coal anyway, and then through gas. But ultimately, the industrial park we're building with the UNIDO and UNECO is an eco-industrial park. And part of the strategy is that we will slowly start transiting away from even the gas power into renewable energy. And we're looking at solar. So we have a plan to start up the, a feasibility study on a 1,000 megawatt renewable power, company that we're going to set up. And that is to power that industrial park and of course, excess power to other areas. So yes, we as Walter Smith, we're looking at this transition, but we know that in the short to medium term, I keep saying that, in the short to medium term, we have to consume the oil products, go through gas, and then transit into renewables. Any responsible energy, and I now don't talk about oil and gas, any responsible energy operator or energy CEO that is not thinking about that transition, will get caught out by the time it happens. So we have to start thinking about that now. So BC, the answer to your question is a few of us are thinking about it already and others need to get on board.
Thank you, sir. That's encouraging to hear.
Okay, thank you very much. So we'll quickly take a question from an energy expert in the United States, Femi Osidele. Dr. Femi Osidele, the platform is yours, please.
Greetings to everyone, and sorry I missed my turn earlier. And I'm going to be very quick because my question is one of those that I typically do when I look at things from the 30,000 foot point of view. And by the way, my name is Femi Osidele. I am an integrated energy resource management consultant. I'm based in San Antonio, Texas, USA. A lot of things have been said, and I always try to say, what's that elephant in the room that we are ignoring? And to my mind, it is the government. We've talked a lot about governments, we've talked about politics, we've talked about policies and all that. And I'm going back to something that Carol said, that she had actually given some advice in the past that was not heeded. And I thought, okay, that's probably where the government comes in. But overall, I'm looking at the government from a politics point of view. We're not short of policies, but I think we're short of the ability to negotiate these policy instruments and effect them, given the fact that we're operating essentially in a political environment. If there were three things, and I'm just going to ask this in any order, if there are three things you're going to tell our governments in sub-Saharan Africa, and that's to our three speakers, what would they be? as in what to do by way of recommendations and advice.
Okay, thank you very much, Dr. Femi Osidele. So I'd like to begin with the first speaker, Dr. Stuart Lake, and then Engineer Chikezie Nwosu, Dr. Carroll's next. So let's start with Dr. Stuart Lake, please.
Look, I think governments need to incentivize industry to align its capital allocation to help with developments such as gas and help governments achieve a carbon neutral ambitions where they can do so. I also think governments play a role in terms of being open and transparent and being responsible, and contract sanctity is critical in that addressing that issue. I also would say that the policies that they have to be clear, transparent, and they need to follow them. That's the important thing. You know yourself, you're living in Texas, I'm also half American. You know, government policy can change on a dime with an election, as you've just seen. And so, you know, that issue is not specific to Africa. It's everything in the West also is changing quite frequently. But the energy transition is coming, whether people like it or not. You have to deal with that. Governments need to be much more open and transparent. Coming back to Chike's point, pointed earlier, you know, some of the governments in Africa are still expecting massive signature bonuses like Niger. You know, no one's doing that any longer. They're not going to get any investment. They need to be clear about profit sharing and open and transparent instruments. If that's not there, they won't get the investment. Simple as that.
Okay, so we'll move to Engineer Chikezie Nwosu. Your comments, please.
Okay, government just has to help to drive down the cost of doing business. It's that simple. Doesn't matter, you know, what angle you look at it, security, contract sanctity, you know, an investor is coming in, and at this time, the project looks as if it has a significantly high rate of return. But then you know that the government policies are not stable, and maybe in another 5 years' time, somebody comes and does something crazy, and that's it, the investment disappears. So it's around creating a stable and low-cost environment for doing business. And you know, I say that, and it sounds as if you know, it's simple, but it's a very complex thing in Africa. It requires government to get away from the involvement in business. They can create an environment, but step away. Yeah, don't overregulate the business. Some amounts of regulation are fine. What I suffer in my business, for example, is every other month, there's a regulatory agency that is looking to make money because government is looking to raise revenues. How does that help me maintain a stable and low-cost business environment? So it's important that government creates policies that help to provide this low-cost environment. But even more important is that when they create these policies, they should stand away. Let, you know, a private industry manage these things. I laugh when I hear about government trying to resuscitate moribund refineries. Why? Yeah, hand them over to people who know how to do this thing. You know, I'm not saying give them to Waltersmith, but find people who know how to do it and hand it over to them, and they'll do it at a much lower cost. And government, you know, they need to understand that the impact that the private sector makes when you create that environment will generate significantly more revenue for government if that is what they're looking for. But it has to be long-term, stable thinking.
Okay, so we'll take a final concluding statement on that question from Dr. Carroll Knackley, CEO Crystal Energy, please.
I will not repeat what my co-speaker said because I fully agree with everything they highlight in terms of what should be done. But let me give you an example of what the private sector can do in an enabling environment. Think of the shale revolution in the US. Massive resources that we thought were uneconomic for decades. And yet, despite everything, within a very short period of time, the US transformed itself and became the biggest producer in the world, you know, a very booming industry because the private sector had the right ingredients to flourish. Now imagine what you could do in Africa with much cheaper resources, perhaps very big resource base, if you provide the right enabling environment. Now, I will not go to the details of what we mean with enabling environment because the list can be very long, but I tell you one thing that I would love to have an answer for from my experience, especially in Africa. I find that countries which have which don't have sufficient administrative capacity, whether at ministries or regulatory authorities or even within the national oil companies, they tend to go for the most burdensome regulatory framework, complicated fiscal regimes, and they end up with very high bureaucracy in the country. Whereas you have countries which much more able and strong administrative capacity, everything is simple, crystal clear. But anyway, you have something simple, very clear lines of authority, very clear delineation of roles and responsibilities between different government entities, and not, you don't have overlap, you don't have conflict between, let's say, the regulatory role and then the commercial role. Then you find that also there is more transparent and much better governance of the sector. And of course, they both score high from an investment perspective.
Thank you. Thank you very much. I'd like to thank each and every one of you for participating. Yes. Virtual meeting for the upstream oil and gas investments post COVID-19. We look forward to seeing you next year. Our next virtual meeting will be held in the month of April 2021. Thanks to all our very distinguished speakers, Dr. Stuart Lake of Invictus Energy. Thank you very much, Engineer Chikeze Nwosu Walter Smith. Thank you so much, Dr. Carol Knackley from Crystal Energy. Thank you, Abubakar Anna from Portugal. We look forward to seeing each and every one of you next year. Thank you to the former COO, NNPC Downstream. Thanks to Rain Oil. Thanks to ExxonMobil, Chevron, and of Shell, the representative of the minister and the chief of staff from the Ministry of Petroleum. Thank you so much for joining us. Thanks to the Commissioner for Energy Gambia. Thanks to the Deputy Minister Energy Ghana. Thanks to the representatives from Equatorial Guinea, from all our guests and invited people from the USA. We are so grateful for having you. We look forward to seeing you next year. My name is Wafai Samuel from Foreign Investment Network. I'd like to say goodbye. Thank you very much.